Welcome back to Talk Tickers, the show where we, break down these earnings calls so you don't have to. Today, we're diving into Grocery Outlet's latest report. And let me tell you, 2024 was a wild ride for them. They had system upgrades, new leadership, and some real challenges to tackle.
Yeah, it's what's fascinating here is that despite those bumps in the road, they still managed to pull off a 2.9% increase in comparable store sales. That growth was driven mainly by more customers walking through the doors, which suggests their value proposition is still attracting shoppers.
That's a good sign, especially in a tough economy.
Right.
But let's unpack exactly what happened in 2024 before we get into their plans for the future.
Yeah.
What were the biggest hurdles they faced?
Well, they rolled out a massive system upgrade.
Okay.
And it did not go smoothly. I think major inventory management issues and a hit to their profit margins as a result. They're working to stabilize things, but it definitely put a damper on their performance.
So a classic case of, growing pains, but potentially on a large scale. I'm guessing that's where the new leadership team comes in.
Exactly. Jason Potter took over as CEO, bringing 30 years of experience in the grocery industry.
Wow.
And he's not alone. They also brought in a new CFO, Chris Miller, and a new CIO, Kumar Mishra.
Okay.
Both with impressive backgrounds. This signals a real focus on getting their operations back on track.
Okay, so new team, big challenges. What's their game plan to turn things around?
They're tackling things on several fronts. First, they acknowledge that their value proposition, those famous Wow W deals, could be even stronger. So they're planning deeper discounts and more targeted marketing to make sure customers are aware of the savings.
Makes sense. Doubling down on what makes them unique.
Yeah.
What else is in their strategic playbook?
They're taking a much more focused approach to new store openings.
Okay.
Instead of trying to expand everywhere at once,
Wow.
they're going to concentrate on existing markets and high-priority areas where they see the most potential. It's all about quality over quantity and maximizing their return on investment.
So playing to their strengths and being more strategic about growth. Any other big shifts we should know about?
One of the most interesting decisions is their choice to pull back from expanding into multi-temperature distribution.
Oh.
They were initially considering building out refrigerated warehouses to handle more temperature-sensitive products.
That sounds like a complex and expensive undertaking. What made them change course?
It seems they realized it would have been a huge distraction from their core business and stretched their resources too thin.
Okay.
They've decided to stick with their regional approach, focusing on efficiency and simplifying their supply chain.
Right.
They just opened a new ambient distribution center in Vancouver, Washington, which illustrates this strategy.
So it sounds like they're really stepping back to assess what works best for them and where to focus their energy. But this also raises a question. How does this impact their product offerings? Does sticking to ambient distribution mean they can't offer as much variety?
It's a trade-off. They can still offer a wide selection of products, but it does mean they'll be more selective about the categories they prioritize. They might not be able to carry as many fresh or frozen items, for example, but they believe they can still deliver plenty of those Wow W deals within this model.
It'll be interesting to see how customers respond to that. Speaking of customers you mentioned, they're planning deeper discounts. Does that mean they're sacrificing profitability to attract more shoppers?
Well, they did take a hit on margins in Q4
Okay.
because of those system upgrade issues.
Right.
And they are forecasting gross margins between 30% to 30.5% for 2025, which is slightly lower than their historical performance.
So they're acknowledging there will be some pressure on profits as they work to stabilize their operations and ramp up those Wow W deals, but they're projecting comparable store sales growth between 2% to 3% for the year. Is that enough to satisfy investors?
That's a good question. It's a bit lower than their historical growth rate, but it reflects the current economic climate. And the fact that they're going through a major transition, they're being realistic. But it remains to be seen if it will be enough to excite Wall Street.
All right, so lots of moving pieces here.
No.
What should investors be paying the most attention to as they assess Grocery Outlet's future prospects?
There are a few key things to watch. First, can they successfully stabilize those systems and get back to operational efficiency?
Okay.
Second, how will those new store openings perform? Are they really getting a better return on investment with this more focused approach?
Yeah.
And finally, can they deliver on those deeper discounts without eroding their profit margins?
So it's all about execution at this point.
Yeah.
They have a plan, but they need to prove they can deliver. It's a fascinating situation.
Absolutely. And speaking of fascinating this, let's shift gears for a moment and get into our This Is Not Financial Advices segment. Remember, this is purely for entertainment purposes. We're just having some fun exploring some outlandish yet plausible trading ideas based on what we've learned about grocery outlet.
Okay, hit me with your wildest grocery outlet trade idea.
All right, here's one that's a bit outside the box.
Okay.
Given their focus on delivering incredible value and their decision to simplify their supply chain,
Right.
what if they launched their own private label brand of staple products?
Interesting, like a YW brand of everyday essentials.
Exactly. Think high-quality pantry staples, cleaning supplies, maybe even personal care items, all priced aggressively to compete with the big national brands.
That could be a smart move. It would give them more control over their supply chain, potentially boost their margins, and further differentiate them from the competition.
Exactly. And it aligns perfectly with their value-focused customer base. People are already coming to Grocery Outlet for deals. Imagine if they could get all their basic necessities at rock-bottom prices under a trusted WowW brand.
Okay. I'm starting to see the potential here.
Yeah.
But wouldn't that require a significant investment in product development and marketing?
It would, but it could be a game changer for them if they execute it well.
All right, I'm intrigued. But let's not forget, folks, this is not financial advice. We're just having some fun speculating here. Always do your own research and consult with a financial professional before making any investment decisions.
Absolutely. But it's always fun to think outside the box and consider the possibilities.
And speaking of possibilities, we've only just scratched the surface of Grocery Outlet's story. We'll be back with part 2 of this deep dive where we'll explore their growth potentials, dissect their plans for cost optimization, and dive deeper into those strategic shifts. So stay tuned. Welcome back to Talk Tickers. We're in the middle of dissecting Grocery Outlet's latest earnings call. And so far, we've uncovered a company at a crossroads. They're facing challenges, but also making bold moves to solidify their position in the market. One area where they're really shaking things up is their approach to new store openings.
Right.
As we discussed, they're moving away from broad expansion and focusing on existing markets and very selectively choosing new areas to move into. Right? It's all about maximizing their return on investment, which makes a lot of sense given the economic headwinds they're facing. But this strategy hinges on those new stores performing well.
Yeah.
What did they reveal about their plans for these new locations?
They're laser focused on ensuring these new stores hit the ground running.
Okay.
They're implementing stricter site selection criteria to identify locations with the highest potential for success. They're also putting a lot of emphasis on pre-opening marketing and community engagement to build buzz and attract customers from day one.
So no more just throwing open the doors and hoping for the best.
Right.
It's a much more calculated approach. But what about the stores they already have? Are they making any changes to their existing operations?
They're definitely not neglecting their existing store base. In fact, they're investing in several initiatives to improve efficiency and enhance the customer experience.
Okay.
They're rolling out new technology to streamline checkout processes and reduce wait times, for example. They're also optimizing store layouts and product placement based on customer data and shopping patterns.
Right.
To make it easier for people to find what they're looking for.
So making the most of their existing footprint while being very strategic about where they expand is a smart, if somewhat cautious approach to growth. But growth isn't the only thing on their agenda. They're also talking about becoming more scalable. What does that entail exactly?
It's about creating a business model that can efficiently handle increased sales volume and expansion without a corresponding increase in overhead costs. They're looking at this from multiple angles.
Okay, break that down for us. Where are they finding these efficiencies?
As we discussed, they've already streamlined their supply chain by pulling back from multi-temperature distribution. That move alone will save them significant capital expenditures and simplify their logistics. They're also exploring ways to automate certain back-office processes and potentially renegotiate contracts with suppliers to get better pricing.
So squeezing cost out of every corner of the operation, but we can't talk about scalability without addressing the elephant in the room.
Yeah.
The workforce reduction they announced.
That was a difficult decision, but it was a necessary step to align their expenses with their growth strategy.
Right.
It's important to note, however, that they're not just slashing jobs across the board. They're taking a strategic approach, identifying areas where they can leverage technology and automation to streamline operations and reduce reliance on manual labor.
And how are they handling this transition for the affected employees?
They've emphasized their commitment to supporting their employees through this process. They're providing generous severance packages, outplacement services, and retraining opportunities to help those who are leaving the company find new positions.
It sounds like they're trying to do right by their people, even as they make tough choices to improve the business. But focusing solely on cost cutting can sometimes come across as a sign of weakness or desperation. Is there anything they're doing that signals confidence in their future?
Absolutely. One area where they're demonstrating their commitment to long-term growth is their investment in technology and data analytics. They're upgrading their systems to capture more detailed information about customer behavior and preferences. They're using this data to personalize marketing campaigns, optimize product assortment, and make more informed decisions about pricing and promotions.
So they're not just cutting costs. They're using technology to work smarter and become more responsive to their customers. That's a promising sign. But let's not forget about that big acquisition they made last year. How is the integration of those UGO stores progressing?
It's still a work in progress, but they've made significant strides. They've been refreshing those UGO stores, introducing the Wow W deals concept, and working to align their operations with the grocery outlet model.
And what about their plans to convert those UGO stores to the independent operator model? That was a key part of their rationale for the acquisition, right?
They're committed to that transition, but they're taking a phased approach.
Okay.
They understand that it takes time to find the right independent operators and ensure a smooth handover. They've been gradually converting stores, and the early results are promising. They're seeing strong performance from the converted locations, which validates their belief in the power of the independent operator model.
So they're making progress on multiple fronts. They're streamlining operations, becoming more data-driven, and carefully integrating those UGO stores. But they're also facing headwinds, including margin pressure and the more competitive landscape.
It's a complex situation, that's for sure. They have a compelling business model, a strong leadership team, and a loyal customer base, but they also have their work cut out for them.
Well said. And that brings us back to our This Is Not Financial Advice segment, where we explore some wild but potentially profitable trading ideas inspired by grocery outlets' current situation. Remember, this is purely for entertainment purposes. Do not base your investment decisions on our ramblings.
All right, let's get speculative, given their focus on data analytics and their desire to enhance the customer experience.
Okay.
What if they launched a personalized loyalty program?
Ooh, I like where you're going with this. Like a program that rewards customers for their repeat business and tailors offers based on their individual shopping habits.
Exactly. Imagine a program that tracks your purchases, identifies your favorite products, and sends you personalized coupons and recommendations. It could even offer exclusive deals and early access to new Wow W items.
That could be a powerful tool for driving customer loyalty and repeat business. It could also give them valuable data about customer preferences and buying patterns, which they could use to further refine their operations and marketing efforts.
Right. It's a win-win. Customers get rewarded for their loyalty, and Grocery Outlet gets even more insights into their shopping behavior.
Okay, I'm on board with this idea, but let's be realistic. Building a robust loyalty program takes time and investment. Do we think they have the resources and the bandwidth to pull this off right now?
It's a valid question. They're already juggling a lot with those system upgrades and the UGO integration, but if they see the potential, they might prioritize it as a key initiative for the future.
It would certainly be a bold move, but it aligns perfectly with their data-driven approach and their focus on customer value.
Absolutely. It's something to keep an eye on as they continue to evolve their strategy.
Well, we'll definitely be watching closely, but for now, we'll have to leave our speculative trading ideas behind and get back to the reality of Grocery Outlet's situation.
And that reality is a company in transition. They're making tough choices, investing in their future, and betting on their ability to deliver those Wow W deals in a more efficient and scalable way.
And we'll be back with the final part of this deep dive to explore whether their strategy will be enough to overcome the challenges they face and deliver on their long-term growth ambitions. Welcome back to Talk Tickers. We're wrapping up our deep dive into Grocery Outlet's latest earnings call, and one thing's for sure. This company isn't afraid to make bold moves.
Yeah, it's clear they're playing the long game. They're not just focused on short-term profits. They're building a foundation for sustainable growth. And one key element of that strategy is their commitment to those independent operators who run their stores.
Right. It's a unique aspect of their business model.
Yeah.
But we haven't talked much about how these operators are being impacted by all the changes happening at the corporate level. What are they doing to support them?
Communication is a top priority. They're holding regular meetings and webinars to keep operators informed about the company's strategy, the rationale behind the changes, and how those changes will impact their day-to-day operations.
Transparency is key, especially when you're asking people to adapt to a new way of doing things. But communication is only part of the equation. Are they providing any tangible support to help operators navigate these changes?
Absolutely. They're offering enhanced training programs to help operators implement new technologies, optimize store layouts, and adapt to the evolving customer demands. They're also providing access to data analytics tools to help operators track their performance, identify areas for improvement, and make more informed decisions about inventory management and pricing.
So they're empowering those operators to succeed, not just dictating changes from on high. It's a partnership, not a dictatorship. But let's zoom out for a moment and consider the bigger picture. Grocery Outlet is facing a lot of competition in the grocery space.
Yeah.
What are they doing to differentiate themselves and stay ahead of the curve?
They're doubling down on what sets them apart. They know they can't compete with the big chains on price alone. They're focusing on curating a unique shopping experience that combines those wow W deals with a treasure hunt atmosphere that you just can't find anywhere else.
Right, it's about the thrill of find the unexpected bargains that keep customers coming back for more. But are they doing anything to enhance that treasure hunt experience?
They're constantly experimenting with new ways to surprise and delight customers. They're partnering with local vendors to source unique products. They're creating themed displays and promotions, and they're using social media to build excitement and generate buzz.
So keeping things fresh and exciting, it's smart. But let's be honest, they're also facing some serious challenges. Those system upgrades caused major disruptions. They're dealing with margin pressure, and the competition is fierce.
Yeah, they're definitely not immune to the headwinds buffeting the industry, but they have a proven track record of resilience. They've weathered economic storms before, and they're adapting their strategy to navigate the current landscape.
And that brings us to the million-dollar question. Can they pull it off? Can they overcome these challenges and achieve their ambitious growth goals?
It all comes down to execution. They have a solid plan, a strong leadership team, and a passionate group of independent operators. But they need to stay agile, adapt to changing conditions, and continue to innovate to stay ahead of the curve.
Well said. And that wraps up our deep dive into Grocery Outlet's latest earnings call. We've explored their financial performance, dissected their strategic shifts, and examined their plans for the future.
It's been a fascinating journey filled with challenges, opportunities, and a few wild trading ideas along the way.
And speaking of those wild ideas, let's end this episode with one final, this is not financial advice moment. Just for fun, let's imagine a scenario where Grocery Outlet decides to wait for it. Partner with a popular social media platform to create a live shopping experience.
Whoa, now that's thinking outside the box. I can picture it now.
Yeah.
Live streams featuring those wow W deals, influencers showcasing unique finds, and viewers snapping up bargains in real time.
It would tap into the growing trend of social commerce and create a whole new level of engagement with their customers. It could even attract a younger demographic who are active on those platforms.
It's a bold idea, but it aligns perfectly with their focus on innovation and creating a differentiated shopping experience.
All right, we'll leave it there before we get too carried away. But that's the beauty of this show. We can explore those what-if scenarios and have a little fun while we're at it.
Exactly. Remember, folks, this is not financial advice. Always do your own research and consult with a financial professional before making any investment decisions.
Thanks for joining us on this deep dive into Grocery Outlet. We'll be back next week with another insightful earnings call breakdown. Until then, happy investing.